CBDC Asset Group back one more time. Thank you for being a part of the group. Got a lot of stuff to dive into today, like this. Brad Garlinghouse talking about a new global financial system, new central bank partnership for Ripple, Gary Gensler's role in the SEC and crypto. The U.S. has sanctions against SueX.io, claiming that 40% of their transactions are involved in ransomware. Stay tuned. Don't forget to hit the bell for notifications when I drop a new video. Subscribe and share with family and friends.
We have the opportunity to build a new global financial system together for all.
Ripple partners with Central Bank of Bhutan to launch CBDC trial. Central Bank of Bhutan has picked Ripple as its CBDC partner. The Royal Monetary Authority of Bhutan will start trialing a new digital ingutram in partnership with Ripple, Japanese financial news outlet Nikkei reports. The San Francisco-based company will integrate its distributed ledger technology into Bhutan's existing payment system with the help of its CBDC private ledger product. During the trial phase, Ripple-powered central bank digital currency will be used for cross-border and wholesale payments. CEO Brad Garlinghouse says that his company wants to develop a platform that will allow different CBDCs to reach interoperability. The partnership seems to have been in the works for quite some time. Tashi Yazir, Senior Payment System Officer at the Royal Monetary Authority of Bhutan, was one of the speakers at Ripple's Swell webinar for the APAC region that took place in April. Yangshin Toshigil, Deputy Governor of the Central Bank, expects a Ripple-powered digital Nalgutram to become a sustainable payment instrument. Our collaboration with Ripple is testament to the potential of CBDCs to provide an alternative and sustainable digital payment instrument in Bhutan. The partnership is expected to increase financial inclusion in the country by 85%. As reported by You Today, Ripple announced a private version of the XRP ledger designed for central banks in early March. It pitched the solution as instantaneous, energy efficient, and reliable. Ripple CTO David Schwartz recently introduced a concept of federated sidechains on the XRP ledger, which would allow central banks to set up their own networks. It also published a white paper called The Future of CBDCs. In July, RippleNet General Manager Ashish Birla said that his team had been having conversations with central banks for a long time. The embattled company claims that its business keeps thriving outside the U.S. in spite of legal woes in its home turf.
Time to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk's The State of Crypto newsletter. Good morning, Nick, as always. So the U.S. government has sanctioned a cryptocurrency exchange for the first time. Give us the details.
Good morning. Yes, yesterday the United States Treasury Department announced that it was filing sanctions against SueX.io, which is nominally a Czech Republic-based exchange, but it appears its offices are actually in a couple cities in Russia. It does not appear to have a physical presence in the Czech Republic. And the Treasury Department is placing these sanctions on allegations that up to 40% of SueX's transactions are basically, to or from addresses associated with malicious actors, including quite a bit of ransomware proceeds. So this is kind of the first step in the U.S. government's ongoing fight against ransomware. And basically what they're saying is, no U.S. persons are allowed to transact with SueX. No U.S. persons are allowed to, do any kind of business with them. Any property will be seized. And, they're trying to block SueX out of the, any part of the American financial system.
Nick, Gary Gensler made a range of comments yesterday. What, in your view, is the greatest takeaway?
So a lot of what he said kind of, retreaded stuff he said before, joking about quote, spill in aisle 3 or, possible wildcat banking. But what really struck me is he made a comment at some point about how he doesn't think, a lot of crypto is really going to last, which kind of seems at odds with his previous remarks when he was lecturing on crypto at MIT. He made a comparison to private monies and noted that private monies generally don't last, but maybe he has a point. But he is also, arguably one of the most powerful regulators who has the ability to kind of make this determination within whatever regulatory framework he unveils ultimately, or how the SEC approaches regulations around crypto. So it definitely seemed to me to be a very telling comment.
Gary Gensler came into the fray and very knowledgeable of blockchain. Everyone knew him as the professor at MIT talking blockchain and courses, teaching blockchain courses. And there was a kind of a theory that potentially he would introduce some more crypto-friendly regulations, understanding the technology and the innovative potential it has. But is that so? Are people, now people are not so sure?
Yeah, this is something I think I even wrote about back when he was first nominated or confirmed. I think a more nuanced view would have been, whatever he does will be more and better informed than, previous heads at the SEC. But, if you look back to his tenure at the Commodities Futures Trading Commission, he did a lot. He had a lot of work in just building out new regulations around derivatives products and complex derivatives products, and basically trying to rein in what at the time would have seemed like a pretty wild sector of the financial market. So I think if you look back at his tenure, this shouldn't be too much of a surprise that he's come out making all these claims and statements about crypto regulation. But I think I should point out that he hasn't actually, instituted any of these regulatory reforms yet. So, we have yet to see if his bite matches his bark.
What does the SEC have to do with crypto? And why is the chair of the SEC talking about crypto? Now, technology has come along decade after decade, but those that have a chance to policy framework. To be clear, I think that the SEC should be technology neutral. But one thing we're not neutral on is investor protection. Our agency, the SEC, has had rules for decades to protect people when companies want to raise money from them, or when we as investors buy and sell securities on an exchange like the New York Stock Exchange. But you see, crypto trading platforms, crypto lending platforms don't have the same level of investor protection that you've come to expect buying and selling stocks on a stock exchange or investing in a mutual fund or a 401k. In the years since Bitcoin was started, literally thousands of other tokens have been launched, many of which traded on platforms may well be securities under our laws. That means if the platforms and certain of the tokens don't register with the SEC, they're non-compliant with the important federal protections in our laws. So I've asked the staff of the SEC to use all of our authorities anywhere we can to uncover any wrongdoing. Our authorities aren't enough. I've also recommended to Congress for them to consider filling those gaps with the goal of investor protection. To those currently or considering investing in crypto, please remember, not only are they a highly speculative asset class, but there are also significant gaps in the investor protection afforded to you. I think that moving forward, promoting investor protection is not only good for you and for anyone who would consider investing in these assets. I think that it's the only real viable path forward for this nascent technology. See, at the heart of finance is trust, and trust rests on investor protection. And so that's what the SEC has to do with crypto, investor protection.
Subscribe, like, share with family and friends, and hit the notification.